All right, hello. Welcome to the London Open Session Silver Bullet. Here we are. Here we are again. Sell side liquidity, buy side liquidity, meandering so far. I'm watching whether we can take out the sell side there. Yeah, quick recap of what happened ever since yesterday. And yesterday we had this price range from low, those equal lows, to those equal highs, and PM session was here. Price was consolidating, then it offered this busy that was then inversed, and I like the idea of using this as inversion to send it into this inefficiency here at least. That was the trade idea. And it delivered, but it gave one more time rally higher, sweeping slightly those equal highs, and then it rolled over. Kinda like I was anticipating. So yeah, interesting little nugget there. Besides that, Asian session was just one pop into quite a bit of consolidation and poorer price action, I would say. Not the cleanest. But now here we are with the long open session. Why price is so rangy after CPI? Well, I guess it's a factor of few things. First of all, we have PPI still today, so maybe they still wait for PPI to unlock the market. That's the first one. Second of all, last week we had quite a large range week, which makes this week probably more likely to be smaller and more consolidated rather than just keep on going. We might see a little bit of a pause, and that's probably what we are seeing currently. Plus, yes, summer doldrums. August is classic for this type of conditions. So yeah, so many factors. All right, so 6 more minutes until the 3 a.m. and let me see one more thing. As you can see, we are currently in a consolidation on the 4-hour chart like this. We have still some equal highs biased at higher time frame, so that's higher time frame where I think we are gonna go, which means here. to clean. This is the bearish order block as a premium array in here. And we have this busy as a discount array. You can see, I mean, we have another busy here also. That's a deeper discount. And annotated too. So price went lower into the lower one with a wick. The body stayed nearly close to the low of this one. And price rallied up into the order block mid threshold. Went past the midpoint of that. And yeah, someone could ask, do we use the body or do we use the wicks? If the wicks are small and stubby, you can use the wicks too. Generally, so it's not like a mistake here to use the wicks versus the body. It's both are theoretically correct. So whatever suits you better. But yeah, this right away gives us a complete tapestry, complete grid of the levels. And very specific ranges also. And you can see how this octane from the 4-hour bearish order block was perfectly utilized here and sent price all lower into this octane in here. Yeah, we can also see how yesterday it worked the PM session around. It was consolidating between those two perfectly. And eventually off of that one, taking buy side. This in here. This in here is magic. But yeah, we'll leave it as that. All right, it's couple more seconds until the silver bullet hour will actually start. I'll just add the key liquidity pools in here. So yeah, currently I kind of like the idea if we could maybe challenge this low. Yeah, so you have some relative equal highs there, but it kind of seems like it will have a harder time to go there right now. So I like how it's completely overlapping this busy, and I would like to see it act as inversion to run the sell side liquidity here, and maybe run towards those. We did close below it, and we gave a little bit of a retracement slash touch into the low of the inversion. And it runs straight away, so that's very good. Should attack the sell side liquidity here now. Well, we got the sell side liquidity here. So now let's see if it can stretch towards those equal lows down there. Yeah, those equal lows are looking very, very suspect. Let's see. I would expect acceleration after this low is being taken out. Let's see. Yeah, so I'm thinking, but I guess this is the the main idea for now. We'll see if we can roll over for those equal lows. True, that's a little bit of a pause in here, but we'll see. It still could displace below this short-term low and attack it. But yeah, that went kind of fast, kind of quick. I'm not gonna lie. Well, Mr. Thailand Tamizhan, thanks for stopping by and asking again. That's pretty kind of you. But yeah, I'm alright. I I'm positive about today. Have a have a good mood. So it's a beautiful day. And I wish you the same, sir. Yeah, by model you can play. I guess it's a little bit too early to tell, I would say. A little bit too early to tell. I would be more prone to state that if we were able to take out the sell side liquidity here first. But yeah. So yeah, that was about a 30 handles run from this inversion for gap to the sell side here, and that's like a reasonable run for a silver bullet. Not gonna lie, that's a pretty decent silver bullet. But yeah, I was too slow to get in line with it. Too much talking, and yeah. Before I ended explaining what I would like to see or expect, price already delivered half of it. So yeah, maybe that's my bad. I should maybe focus on framing an entry first if I have an idea, and then explain it, or then explain what I'm looking for. But yeah, sometimes it's quick, sometimes it's slow as hell. So all right, so on the upside in here, within this price action, we have three inefficiencies that I like a lot as high probability inefficiencies. We have the first one here. Why it's so important? Because it lays on this level, on this octane. We have second one here, this inversion. Why it's important? Already used, and it's the last one before reaching an octane. And we have the third one that's important. It's here. It lays over top of an quadrant. So all of these three inefficiencies, in my mind, are important and potentially forming or offering a severe resistance to the price, especially as we are below them, right? Because they will or should act as premium arrays at the moment. Obviously, this one is the lowest, so it can have the most occurring outside the lines. This one is in the middle. It should be rather keeping the price if it's really bearish, and that's the last line of defense, I suppose. On the other hand, if it's bullish now and price is turning the corner, all of these inefficiencies can revert and be used as means of something that's bullish. So that could be a bullish inversion, that could be a bullish reclaimed BC, and that could be an inversion if it's bullish. But yeah, at this moment, I still kind of like those equal lows. And I still would like to see it roll over rather than just smash higher. But yeah, we'll see what we get. So yeah, so far we haven't traded to any of those after we took the sell side. We almost got into this one, but not really. It actually failed by one tick or so. So yeah, so far the reaction after the sell-side liquidity here was taken out is rather lackluster, right? It's rather slow and consolidated. It's not showing like a strong institutional sponsorship that they bought big time in here, and prices, showing those large candles to the upside and like being quick and fast after the sell side was taken. No, it's rather meandering around. It's trading a little bit higher, but can't really find the energy to continue. It's just slow and not that energetic in a sense, which kinda leads me to like an analogy that there is not enough energy to turn this tide around yet, meaning that the sell-side liquidity here is still potentially in the cards, right? And all of these three PD arrays on the upside are kind of like the lines in the sand where it could go and deliver, right? All right, so now we are trading down into this lower fair value gap. My attention would be still closer to this inversion fair value gap that's higher. So yeah, because thinking in terms of those three PD arrays, the stop loss would need to be above the highest one, right? So stop loss needs to be somewhere above this highest fair value gap. In that case, well, I'm not locked in here. I'm locked in here. Right, so just a hypothetical example, hypothetical idea. Hypothetical idea of using this inversion fair value gap low, stop loss above this CB there, and aiming for the relative equal lows down there. All right, so it went above the CB. Now it's trading back into it as a potential inversion. I would love to see a close being thrown into the lower half. Right, it's meandering around here. I still wait and watch if we can tap into this inversion for value gap. I would like that. So far, this one is being utilized as inversion. It can't even reach the consecutive encroachment. Hmm. Alright, so here it traded to the lower half of this CB, but quickly rejected that. Body staying in the upper half. Let's watch this candle. It seems a little bit too slow in here for this to be really strong and bullish, I feel like. I don't know, but if it were really strong, I would say it would touch 1-2 times this inversion and just like, seek the next one. But spending this much time in here, meandering, that to me is like more like if we tap into this premium array, then maybe we will be rolling over towards those, but so yeah, the bodies are suggesting that it wants to reach this inversion for value gap at least. This now also starts to look like a bull flag in here, an impulse price swing and consolidation like this. So that looks very much as a bull flag, which, to be honest, I would like to see it break higher first, like a bull flag, a proper bull flag shoot, but then fizzle out at this inversion for value gap and then roll over. That would be like a math scenario, I guess. Well, it couldn't even reach into this inversion for value gap yet, which I would potentially still like to see that, I guess, but they are spending lots of time inside of this inefficiency. Well, so yeah, that's actually not a bad idea. All right, so looks like we are gonna get the inversion for value gap, which is a little bit suspicious to me now, is the fact that we did it after touching and perfectly respecting this octane here. Let's see, still not quite yet reached the inversion for value gap. Still a little bit more room to see a touch. I guess I will want to watch and see what it does and how it does after trading up into it. Expecting mainly a rollover towards those equal lows. That's what I expect. And that's what I would like to see, but hey, I can allow the price to book first into this and watch and see how it does. Because if it will respect the lower half nicely here, that's really good. Alright, so there you go. This is the inversion fair value gap. First candle touching it. Yeah, now that's interesting, right? Because now trading into this range should be met with resistance, right? If it's bearish, if it's going for those relatively lows there. So we would prefer not to see much price action above the consecutive encroachment of that line. It forms small little inefficiency here in the form of a Bessie. It has also this wick, which was a premium wick. So yeah, how I can measure the order flow around this area here is to watch and see whether we can close below this little gap or this weak consecutive encroachment. That would be hinting some bearish order flows. We wicked through that, but we are closing way up there. So that's not necessarily as bearish in my mind. And I want to still watch and see, because if it wants to keep on going inside this inversion, then obviously I don't want to go short, right? And because there is quite a bit of the range still, right? I'm risking that if it's gonna turn around here, I should probably be able to find another fair value gap, maybe even lower, or maybe even this one on the downside, to still get in line to attack this low, right? And I don't necessarily need the highest entry. But yeah, what I would like to see is the logic behind it. So far we wicked above consecutive encroachment, but we couldn't stay above it, close lower. That's good. That's what I would like to see. Alright, fair enough, Koho-san. Approaching the consecutive encroachment again. And it's failing there. That's exactly what I want to see. That's exactly what I want to see. And nobody's in the upper half. Right, so now it's showtime, I guess. I guess. Oh shit, Sonia is long. I might be in trouble. Nah, just kidding, just kidding. I mean, what can I say? Obviously, I wish you guys good luck, and I wish myself good luck. All right, I don't like this comeback here. I like the drop initially, but I don't like this comeback of consecutive encroachment here. Yeah, if we can give that back, then that will be far better. By the way, long time no see, Sonia. How are you? Everything's all right? How are you doing? Yeah, that's for sure. That's for sure. But it will eventually change or turn around, I guess. Exactly. Exactly. Yeah, the thing about it is that I don't want to see price enter the upper half of this inversion, right? It should not do that. If it will post any close above it, then it's probably not as good for me, and I might consider just taking it off, because yeah, if it's not moving, then it's not moving. This already looks kind of ugly. Looks kind of ugly. It does respect the inversion for y gap still here still, so that's the positive. But this back and forth overlapping price action sloppy mess isn't very uh, welcome, I would say. So if we can lose this SIBI now and close below it, that should start us sending it lower more aggressively towards those equal lows. Will that be the case? I don't know. I trust it will overtake this SIBI and do that. But yeah, it has to stay somewhat heavy in a sense here. I don't want to see it have easy time stabbing into this inversion, because if it does, then I'm not as confident as I would be or could be. So this week, premium week, consecutive encroachment, preferably no close above it at this moment. That would be indicative of a weakness, of a weak order flow currently, and that's what I want to see, right? Because that would support the idea that we might be reaching those equal lows down there. But yeah, the line in the sand is the consecutive encroachment of this inversion. It should not surpass that on a closing basis. Right, so far I like that. We opened, we couldn't even reach consecutive encroachment of that week, and price is trading lower slightly, not closing at the low, which would be ideal, but trading slightly lower. So that's a little positive sign. Let's see if the next one can roll over. So it went into the lower half of the CB now, and it's spending quite some time in it, not having that much of an easy time going into the upper half. Still, these are small little range candles, a little bit of a consolidation. I want to see it eventually start showing some large down candles. That's the point. That's the next step that needs to be followed. Otherwise, we are just consolidating, and that's not comforting me enough, I would say. And well, looks kind of sloppy though, admittedly. But yeah, at the same time, the sell side looks really, really sweet. So let's see. Let's give it a little bit of more time, a little bit more of room, because yeah, so far it's performing slowly but surely in the direction that I wanted. So I cannot be upset about that. And eventually, like, we close below the CB now. So this CB now should act as a measure of reclaimed bearish fair value gap, which means the lower half should offer premium sensitivity and possibly large range expansion out of it. Large range to the downside, right? Right, let's see if we can maintain the heaviness. We have a bearish breaker now also. High, low, higher high. This last down candle inside of the swing, that's a bearish breaker. We close below it. So I would like to see it also provide some measure of heaviness. This is how it looks like in here so far. Very slow grind lower. So yeah, from the entry, 50% of the target is here. So that's about where, like, securing the break even would be, I guess, reasonable. Well, I don't like this turnaround here. So I think just because it's pretty sloppy, I will take it to break even here, just in case to not necessarily risk a loss on this, because yeah, it's really sloppy. If it wants to go, it can, it should do it from where it is, but yeah, it looks also at the same time pretty damn difficult to trust. So it can fairly easily stop me out here, and if it will, I will live with that, I guess. In my mind, it took way too much time to deliver this much of a price run. I was expecting way more speed out of it. It was not presented to me, so it either will be or I will get stopped out, right? So I love this reaction of the consecutive encroachment of this fair value gap. That's a beautiful little signature here, and that's a beautiful drop though. Exactly, that's what I was looking for. So let's take a partial here. I will take one off. I will change the limit orders, and best case scenario, the sell liquidity here. Let's see if I can get that, and well, that's what I was looking for. Exactly. Whew. There we go. Nicely stretching into the sell liquidity and done. So thanks for playing, Sonia. Obviously, I'm being facetious, but yeah, today I got away with my lucky idea. Well, good, because still fighting with the drawdown, every small little win like this is very welcome. So I managed to squeeze 151.50 win for today, recouping a little bit of the drawdown back. So that's very good, very positive. And here we are, still fighting for the greatness. Let's take a screenshot, and I will have it for later so I can log it. Nonetheless, this was the inversion fair value gap that I utilized, and that was the sell liquidity relative equal lows. Here are the relative equal lows, but I've chosen this higher low here as the easier objective on the downside, not needing this lower one to actually hit, right? So that's a little think about that. Nonetheless, thanks for watching though. This will be it for me for today, and yeah, I'll be back tomorrow for one more or two more or three more sessions. Who knows? We'll see. Yeah, it made us work for it, but nonetheless, unless it delivered. So that's good. I wish you guys a pleasant reminder of the day and see you next time. So bye bye.